Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over some questions that people had in the comment section. I like answering your guys' questions and at least giving my opinion. Doesn't mean I'm always right, but let's dive in. I'll read some questions here and I'll give you my opinion. And the first one's an interesting one because I'm now starting to ask myself the same question. It says, that's an interesting comment, but what are these market conditions facilitating gold going up? Seems quite an opposite circumstance to me with financial conditions all over the world getting tougher. Well, usually in history, gold and silver have gone up on the back half of inflationary periods where interest rates start to go up. So it seems counter to what most people think. They think when interest rates go up that the market is tightening in terms of lending standards and everything. But if inflation is greater than the interest rate and the interest rate's going up, what that does is it forces money to move. We haven't had large interest rates impacts yet. They are coming, and we're starting to see the beginning of what I call a rotation of money out of technology growth stocks into value, commodities, and precious metals. We just haven't seen that rotation into precious metals yet. We've seen it in the commodities. We've seen it into oil. We are going to see it in uranium and all these other ones. It's going to come and it's going to be a flood. We just have to be patient. This is what it feels like. Everyone, this is what it feels like to be first or to be in the beginning. It works. And it's volatile. We're not doing launching moves yet. That comes at the end of the bull market. I think that these bull markets are liquidity driven. The cycle, at least that I'm talking about, some of these commodities may extend past the liquidity cycle because of demand, the supply demand deficits. Something like uranium could be in a huge bull market for 20, 30 years. It all depends on the supply demand, and some of the commodities have incredibly good, we'll call it supply demand balances. They're going to be running deficits for a long time. Copper, silver, platinum, some of the energy. I mean, we could be entering a very tight period for a lot of commodities, and this could be a very big commodity super cycle, and those people can be right. I'm just looking at the liquidity coming from the real estate sector into the world, so to speak. The money being created through that loaning process. So that's what I'm looking for, is that liquidity and interest rates coming on up. That usually forces money. It directs money differently into the economy, and that's my opinion. I mean, that's how I view things. Someone says quite a few individual stocks in the NASDAQ are crashing 15, 20, 30%, but the index is down 3.75%. To me, that means money is transferring into value stocks, but it would seem uranium is not currently seen as value. Uranium's just, we got to be patient here, guys. This stuff is slow. It's messy. Uranium did incredibly well under an increasing interest rate environment last bull market. I think that's when everything kind of started. Now we just got to wait. I mean, it may be a month or two before we head higher. Maybe it hopefully by me saying that, it just rockets higher now. But just be patient. We do not have anyone telling us that we have to buy this and that it has to perform right now. What I hope happens is that it stays down for a little bit. I can actually get more money into it. And I'll just continue to pile into it, and then eventually we just get a massive move. Uranium is still of incredible value. Incredible value. And that's one of the reasons I continue to pile into it. Oil's already gone up quite a bit, so I'm kind of riding oil, but I keep continuing to add into uranium because it's down. That's perfect. That is what you want. And we're going to have an energy crisis. We're going to have natural gas go up probably quite dramatically. Definitely next year, because if we don't fix this natural gas worldwide, I mean, we could be entering a world of scarce energy, period, where we can't produce as much natural gas that the world wants to consume. We can't produce as much oil as the world wants to consume. And I'm going to make a point here. If you look at energy return on investment, we are going after lower and lower returning energy sources. What does that mean? It means that the world is going to have to become more efficient with the way it uses energy. Because if we're at 100 million barrels, and this is volume I'm talking about, if you're at 100 million barrels and we want to use, and let's say, I'm gonna make up numbers here so you guys can understand what the difficulty of what we're going to go through. So let's say we were coming on up, and let's say at like 80 million barrels, right? So 80 million barrels, there's your 80 million barrels per day. That's what the production was a little while back. At 80 million barrels, let's say that every barrel that we expended netted us 60 return. So if we're at a 1 to 60 ratio, so 1 divided by 60, that means we are putting back, of the 80 million, we are expending 1.6% of those barrels to get energy out of the ground. The rest is used for society to do work. So that's 80 million is 1.333 million barrels went back to get energy out of the ground for oil, just roughly speaking. That's at a 1 to 80 ratio, I think, is what I had. We are going after lower returning oil. What if that ratio drops to 1 to 10? So 1 to 10 means that 10% of what we're going after has to go back to get more oil. At 80 million barrels, and I'm just choosing 80 randomly, that's 8 million barrels. So we were at 1.33. So we are consuming 6.666 more million barrels of oil to get oil. That means that as we go up and we are finding less and less returning oil, we have to actually produce larger and larger volumes. So if we go to a 1 to 10, and that's what we're going after, everything going forward, and let's say we were at 100 million barrels, 100 million barrels times 0.1, if that's what we're going after, we need 10 million barrels on top of the 100 million barrels to stay flat. If that makes sense. It's about the usable energy to society. That's the whole name of the game. Money and the cost of all this stuff doesn't matter. It's how much money or how much energy gets to where it needs to go. So as we're going up and we're producing more and more oil from lower and lower grades of oil, where our returns are less and less and less, we're going after oil sands, oil shale, we're going after deep sea drilling, we're going after all these things with lower returning oil versus, say, the Middle East that has a 1 to 80 or 1 to 100 return. 1 barrel expended gets 100 barrels back. We're going to have to produce far more oil to stay flat to the energy to society. And I don't think people understand that. 100 million barrels of low-grade oil is not 100 million barrels of high-grade, where the energy returns on the higher, easier to get stuff is far different than the lower stuff. So what we're going to do with time, as we exponentially increase our energy demand, we are going to go after lower returning oil, which means our volumes are going to have to go far higher. So in the old regime of 80 million barrels, you may need to produce 100 or 150 million barrels to remain flat for the energy to society. Make sense? And remember, that wants to decline. The oil produced wants to decline substantially all the time. Because if you go after lower and lower returning oil, those oil fields and oil wells don't last as long. And we have to expend that much more energy to get it. Then you've got the declining ore grades in all of the metals, which means that you're going to have an exponentially increasing use of energy into society. We may have to produce 400 million barrels to stay flat of the stuff that we are producing today or 20 years ago. What does that mean? It means that we have to produce so much more energy than what we are using today to get out lower and lower grades of copper or other minerals on top of lower energy return on investment of the oil and whatever else we're extracting itself. It is a huge headwind moving up in production. So I think that energy is going to get a lot more expensive over the long term. And if we're at peak oil, it's going to be interesting. And maybe that's why they could be hiding it under a climate, problem where they're all going to try to rush to renewables. It's not because of the climate, it's because they know that the oil is going to get very scarce here. And I'm just guessing. I don't know. Maybe not. We'll see. But as you go up, lower energy returns is not going to be easy, and lower ore grades as well on top of it. But we'll see. I mean, you know what they say. Everyone always says this on the channel. High prices cure high prices. Well, I mean, we need more energy. And high prices, well, we'll see if it cures high prices, because it's not the prices that matter. It's the energy that gets to where we need it to be. That's not prices. That's an energy physics type movement, not a financial. The financials don't run the world. It's a physics-based world. You can print more money, but if something doesn't exist, it won't solve it. You might have a different solution. Maybe you're in a predicament where you have to handle outcomes and you don't have solutions. That's a much different scenario where prices can't solve it. But we'll see. We'll see where that goes. It says, I'm super bullish on gold and silver, but can't stop seeing an ascending, broadening wedge beginning around 12.921. Like you, I'm hoping for a move higher, but this being the third touch to the downside of the megaphone, do we roll over and break lower? Guys, the way that I look at this, a lot of people worry about the path that we're going to take. I think that gold and silver are going to go higher over the long term, no matter what. Now, the path that we take, we could drop down or we could go up. The way that I view it is gold and silver a good value? If the answer is yes, then why sell it? Why just hold on to it? If we go down, cost average in and buy more of it. If we go up, well, you're already in it. So that's the way that I view it. If it's of good value and you think that it's going to go up, which I do, I'm holding on to it. There's no reason for me to sell it. Where you get in trouble is when you try to time short-term movements. That is where you get into trouble. That's where I have gotten into trouble. That is where I have missed out on things. I've tried to do too much. The way that I'm playing this is I buy my shares when they're cheap. We know they're cheap now. I would continue to buy gold, silver companies and slowly cost average in. I would continue to do that, especially the royalty companies. And I like physical metal. Like physical metal is, I really do like physical metals. Why? Because you're protected against the energy problems. If we really do have energy problems, you're going to see supply of all these things go down. And a bet in the miners is that you're betting that the mining will go up. But if their input costs go way up, your cost curves are going to go way up. So they're not going to make any more money, but the metal is going to go up, and that's going to be profit to you. That's going to protect your wealth. And it depends on the scarcity and the utility to society, in my opinion, for those metals. And if you've got a metal like silver, which is used in like everything, it's a number 2 commodity, then you're going to have something of great value. And if energy becomes more scarce and it's harder to get these things out of the ground, I mean, maybe a royalty company doesn't do as well because the volumes drop. But if the volumes drop, your physical metals should go through the roof. You're protected. And I'm looking at this from an energy scarcity standpoint. Maybe I'm completely wrong. Maybe we find we figure out our energy scarcity needs, and we can extract this stuff far greater at greater rates, even though the ore grades are declining. Then your royalty companies would do incredibly well. And that's what I'm playing. I'm playing the royalty companies. I don't want the input costs. It says the millennials aren't going to need new homes because they're going to live with their parents until they inherit that house. Maybe that very well could be true. I know whenever my parents pass away, I'll probably sell their house. It's too cold where they live. I don't want to live there. But if they buy something down south, I would keep it. So I wouldn't sell it. So it depends where the house is located. If they do decide to sell their house where they're currently at and they move south, let's say something like in Arizona or something like that, I would keep the house. I would not sell it. I would keep it and use it for either a second house or use it as storage when I go down and visit and stuff. And that's what I have. I don't think people are just going to sell all their homes, especially those who, like I would be fine holding on to a house that has low property taxes. Right now they have high property taxes, and I would sell it and buy something else. That's what I would do. Says with the crash in tech, there's a lot of destruction of money. That's not destruction of money. That's rotation of money. If you had Meta, your funds just went poof. Doesn't leave much for rotating into gold. So the loans have to, that's money. So money's not being destroyed. It's going to rotate over from tech. So when you're seeing all that go down, that's people selling. You have to destroy loans for a destruction of the money supply. Usually that comes from the real estate market and from foreclosures and stuff like that. It depends how we transition from a expansionary phase to a recovery phase, what that recession looks like at the end of the housing market. It may not be a very big pullback. It may kind of just slowly go down a little bit, or maybe it continues to just go flat or higher during a recovery phase. It just slows way down. It's hard to tell, and it depends on what loans are being made and if those loans will be destroyed eventually. So it depends a lot on all that. It says uranium's getting dumped. Save the positions for a sunny day. Many will fold. We'll see. We'll see how this turns around. I think that uranium could be, I'm not saying it will be, it could be the best performing investment of all time over a very long period of time. And why would I say that? If we go into an energy crisis, and if energy becomes far more scarce, now what you're looking at is you want to produce the most amount of energy with the least amount of minerals. And something like a uranium would be a perfect bet. Same with natural gas, but it depends on how much natural gas we have. It depends what this future looks like 10, 20 years from now. And that's the way I'm viewing it. And I'm gonna try to get Terry back on and get him, and I'm gonna ask him some good questions about the uranium market, about deficits and all these things, what it looks like, how long we think it may last. I'm gonna dig in quite a bit. I'd like to get a lot of answers here and also look at it from an investment perspective. So I do have thoughts in my head about the potential bull market and how long this may last. So we'll see there. Andy, when you say physical metals, are you including copper? Per your gold versus copper ratio chart, it seems like copper could underperform relative to gold. Am I interpreting this correctly? It could, yes. It depends on the market conditions. And if we enter a highly inflationary market condition, I think that we could see gold and copper both go up quite dramatically. Physical metals is the metals that you physically own. Now, I wouldn't own copper because it doesn't store enough value. The value density, the cost that you can store in the metal is quite low. So you could stack so much copper, it'd be ridiculous. So what I would prefer is something where you can store less metal with more value. So gold is one, platinum is another, and silver, you can buy a lot of silver even that's pretty low. But platinum is one that has good value for storing capacity, so to speak. Coming on down, guys, I am creating a website. It's going to be finding/value.com when it comes out. We're creating the website and I'm getting a little bit of help from somebody. And we'll have a lot of information. I gotta figure it all out first. We're going to create it, and it's coming. I know some people want I think a forum or a chat on there or something. I'll have to figure out how to do that. But Yeah, I'm going to go for it. We'll see what I put on there. Some of it will be free. Some of it I may charge a fee because I have to pay for this stuff to get it up. Plus, I mean, we'll see if I can, do this as a full-time thing, and you guys get better quality content as well. Even though I think it's pretty good at the moment. This is stuff that I've learned over the past 18 years of investing, and I looked at it and kind of dug in to see what the leading causes, the leading indicators are. So, I mean, I did spend a lot of time figuring this stuff out, and hopefully you guys are killing it. Hopefully you have a diversified portfolio across energy companies, oil, uranium, fertilizers, copper. You've got a diversified portfolio where the portfolio continues to move on up. That's the goal, is to continually move that money higher. And oil has been doing incredibly well. My Lord, it's been doing well. And hopefully it can continue. It's not good for the world, but I mean, this is just the market conditions that we have and the situation that we're in, and you might as well benefit from it. You got what I need. You say he's just a friend. Bismarcky. Please talk about you. Yeah. I think I'm going to end it there, guys. It's 21 minutes. So hopefully you guys like the content. Give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.